That's what that level is. If we take out the opening range high again and close, if we close above it, anytime that we go below here, opens the stage to come all the way back down to a full gap closure. Otherwise, I'm not interested in going short. It would need to do that. So it has to go below here. Okay, so that's the opening range low. And then we are trading at 10 o'clock. One more. 30 seconds will be at the end of the opening range. So then by that, you know you have the low, and whatever the highest high is, that's your opening range for the day. And you want to do quadrants on that and extend that throughout the entirety of the day. And if you have a macro overlap with that, with time, chances are you have a trade, as long as you know what side of the liquidity you're going to aim for. And I just gave you something that I've never taught that anywhere. Okay, so that's algorithmic. Don't take my word for it. You'll be able to rewind it when you get the recording done. But right now, just pay attention. Okay, and I have this little line here. I explained to you why it was there. And also you understand that a rejection block can be used as a reversal pattern. That means if we have a high here and we're expecting prices to do what? Gravitate where? Well, we have an opening range gap. So if it can trade to fill the gap, or make an attempt to do so, and we're up here, where should the price draw to? Down. Okay, wonderful. Where can it turn to start going down? Well, you have to know your PD arrays. Initial high, that's the opening range high. If it goes above that and spikes through it, which it could have done before it even did all this over here, it could have went up there and hit that wick of the high on the daily chart. Go back and look at how I walked you through the daily chart. It never traded there. So because it failed to get there on this initial run, here's the opening bell, runs up, next candle slightly higher, and starts going back down. Where is it going back below? The rejection block right there on the daily chart. That's the highest up close in that price swing on the daily chart. We failed to get to consequent encroachment of that wick. Is that bullish or bearish? When we have an opening gap, that's a premium. In other words, we had all of this. My mature students have been with me a lot more time. Their gears are turning right now. They're like, what the hell? This is amazing. I know. It gets better. But this opening and rally up and then going right back down below the low and below that rejection block, we couldn't get to the consequent encroachment of that wick. Well, that's intel. That's giving you what? I can't even reach up here for your ICT, so start looking lower. Okay. Well, let's wait for the market to do what? Give us the mid gap. Well, it does that. There goes the whole 70% of the time. It was one more time giving you the proof of it. In this leg here, and it starts to rally back up, it goes right above the rejection block. Go back and look at the lecture lessons. Listen to what I'm teaching there. This right here, that is a turtle soup. But you don't find that shit on Twitter, do you? So, rejection block. It goes above it just enough to reject. Sends it lower, but there's no algorithm. Now, we're sell side, right below the initial low. That low also is just a little bounce off of the old volume imbalance. This ain't support and resistance, and it ain't supply and demand. And Elliott wave ain't catching this wave. He's still on the beach waiting. This is not harmonic. It's not Wyckoff. It's good old ICT. So the sell side below here is going to draw to that. That right there, from rejection block to sell side, that may be your trade setup. That might be your cup of tea. That may be your magic bullet. I didn't say silver bullet. I said magic bullet, because they can form any time throughout the day, all day long. If you go through all this price action, okay, go through it. What do you see? 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 What is this? at that. That right there. That is the very first fair value gap. Let's walk you through it now. If we look at this, and some of you that are signing onto it right now, you're like, oh, this guy's talking hindsight again. You weren't here when we were walking through it. I said the very first fair value gap that forms between 9:30 and 10 during the opening range, because there is no 15-minute opening range, okay? I don't care that you pay $200 for a course. That is absolute horseshit. This is your very first fair value gap that actually runs up into a rejection block with an opening range that has not completely closed in. We did get the halfway of the gap delivered, offering what? Opportunity to see if it can retrace and go lower. If we go above, these are if and then statements, okay? For computer programmers, if you ever studied computer programming, it makes perfect sense. It provides you logic where you have a recipe. That's an algorithm. Algorithmic thought process is if this, then that. If this, then that. Or else. They're all programming statements, okay? And when we were trading here, I said, okay, we're at the top of the opening range gap. Once it trades above, it forces, if we trade below here, it will be a full gap closure. So you're watching price here. Now watch. Go back and listen to it when you can watch the recording. Rewind it and play this part over and over and over again. First fair value gap formed. There is no other fair value gap in here. There is no fair value gap in here. That one is it. Now, if that's your fair value gap, and we went back below the opening range gap high, as soon as we do that, that is indicative of what? Seeking that, where the sell side is. And if it's going to go there, it's going to be a full gap closure. If I was short, I would take partials just above the full gap closure. Why? Because sometimes the gap won't fully close, and then you can see it run and take out the relative equal highs. There's logic there. There's rules there. There's guidance, Kimmel. Okay? There's guidance here. There's rules. There's step-by-step processes. There's if, then, else, or statements. All these things have to be there. Just because I'm calling out a fair value gap on Twitter Spaces and price does this, oh, it failed because they're an idiot. If it goes back into the range, it's going to go here. If it's going to go here, it's going to be a gap closure event. So how will we use that fair value gap if that narrative and logic is in play? Wait for it to trade down below it, then trade back up into it. Then, what was I walking you through? How would you want to see price deliver if it takes out that low? I gave you this low when we were in here. Do we want to see it trade slowly? Do we want to see it go below that low and retrace, go higher? Or do we want to see it trade below it and then accelerate down, move quickly, and a few candles going down? And I said, if it goes below that low, the style and the characteristic of that delivery should be sudden. It should be quick. I don't know. Does that look like it's sudden and quick on your chart? Don't look at my chart. Look at your chart. Even the lay people should be looking at that now. And you should be able to see it right about now or about to be forming. Caleb's probably watching that form now or it had just formed. But all of you that have been watching the stream, you have the benefit of watching real time with 4-second delay what price was doing. Did you hear me waffle? Did you hear me when it was dropping down there? Did you hear me even get excited or